Jim Rogers is here. He is a famous investor, a world-traveled investor. His new book is called Hot Commodities, How Anyone Can Invest Profitably in the World's Best Market. Can I talk about the dollar with you, sir?
You can talk about whatever you want, Charlie.
Explain to me how precarious the United States economic structure is, because central banks in Asia and lots of other places buy so much of our debt at the clip of about $2 billion a day.
Charlie, this is a very, very serious situation. It is a dangerous situation. I have a baby girl who's 20 months old. She has a bank account. She does not have an American bank account because she knows what's happening to the value of the U.S. dollar.
What did she tell you?
Well, she's got to look after me someday, so she's protecting herself for the future.
Tell me all about it.
We owe the rest of the world $8 trillion. That's with a T. Our foreign debts are increasing at the rate of $1 trillion every 20 months. Do the arithmetic, Charlie. That's going to be $3 more trillion in 5 years. Other people understand it. They're starting to move away from the dollar. Our dollar's in serious trouble, and Washington doesn't care. In fact, Washington wants it to go down.
Because they want to see the dollar decline in order to make American exports.
That's the theory. It helps some sectors of the economy sometimes. But, Charlie, this has never worked long term. Many countries have tried it. It has never worked medium term. It sometimes works in the short term, but it is not a good policy. Okay. It never has been.
All right, let's do a little primer here, okay? I mean, tell me what they mean by the current affairs account.
Okay, if we sell $1,000 worth of cotton to people and we buy $1,200 worth of televisions, we are in deficit by $200.
Right.
Because we have sold more than that's the current affairs account.
And it's about $620 to $650 billion today.
A year. Yes,
a year.
Per year.
Right.
Yeah, that's what it means. It's going up at the rate of $1 trillion every 20 months, Charlie.
And with that debt, somebody has, because we're not a saving nation, somebody has to be buying that debt.
Exactly.
American treasuries. And the people who are doing it have been Asia. The Bank of Korea, for example, created a little flurry this week in the market, and everybody got very nervous about that. And then they came back and said, wait, we're not selling dollars. All we're saying is that maybe we're not going to buy more dollars in the future.
But Charlie, if that happens, that is terrible for the value of the dollar, because if nobody's buying it, the only people who've been buying it so far have been Asians, Chinese, Japanese, Koreans, Taiwanese, Singaporeans. They own America right now. We are a huge debtor nation.
Why are they buying it?
If you go to the Bank of Japan and you say why, they say, well, it's policy. They've been doing it for 30 years. It's the perfect bureaucratic mind, partly to hold up the dollar so that they think they can be more competitive and sell more to us, partly because of its policy, partly because they haven't thought about it. But now they're starting to think about it. They're looking at other currencies and at other places to invest. Just like my baby girl. My baby girl is looking at other places, and your baby girl, everybody's baby girl should be looking.
Give me a scenario, even a doomsday scenario first, of what could happen that would be terrible for all of us.
Foreigners stop buying the U.S. dollar, and Americans stop buying the U.S. dollar. The dollar goes down in value. The price of living, cost of living goes up.
Now, so the dollar today, with respect to the euro, is $1.30 for 1 euro, somewhere right in there. Right. Now, it would go down to what, $2?
Let's say it goes to 2 euros per $1. Okay. Scotch whiskey, trips to Paris, you know, all you high-flying jet setters are going to have a very, very expensive cost of living.
It'll be terrible for us.
Your Mercedes, your BMWs, your Volkswagens, you know, all of this is going to go champagne, you know, your lifestyle. Yeah. No, but everything we buy from the rest of the world will be extremely expensive. So we'll cut back. The cost of living will go through the roof. And interest rates will go much higher because nobody will be buying our bonds. Interest rates will skyrocket. So you have a very expensive cost of living, and you have very high interest rates, and that's not good.
Okay, and it would begin because somebody would say, I'm going to be the first out of this bind, and I want to protect myself, so I'm going to stop buying dollars, and maybe I'm going to dump the dollars that I have.
Yes, that's what's happened throughout history. The pound sterling, England's money, used to be the world's reserve currency. They went through the ringer. It went from $5 US to $1 US. It went down 80%. England had exchange controls.
Is that when you and George Soros made so much money?
No, that was before all of that. England used to have exchange controls. You couldn't take money in and out of the country except with great difficulty. I mean, that's what happens to a country when its currency gets in trouble.
Okay, so what should the United States do?
Well,
what should the president do? What should the Treasury do? What should the Federal Reserve do?
We got a lot of things that we have to. We'd have to change the tax code to encourage saving and investing.
And how do you do that?
Well, okay, in Asia, if you have money in the bank, you don't pay tax on your interest. That's money you saved and put in the bank. Why should you pay tax on that interest? If you have dividends, you don't pay taxes. If you save and invest in Asia, they're not running circles.
They reward you for saving.
They reward you for saving and investing.
And their saving rate's about 2 or 3 times our saving rate?
In China, they save over 35% of their income. In America, we save less than 2% of our income, Charlie, because we tax it. If you put money in the bank, you get taxed. You have a dividend, you get taxed. You have a capital gain, you get taxed. You get Social Security. Listen, that's money we put aside, and so they give it back to us. They make us pay taxes on it to give us back. And Charlie, if you die, God forbid you should die, then you really pay taxes on all that money you worked hard all your life to get and saved up, and then they tax you again. They taxed you 5 times by the time you die.
So that means you're not in favor of an estate tax?
Well, of course not. I mean, a poor family
farm. Of course not. A lot of people are in favor of an estate tax. Warren Buffett's in favor of an estate tax.
I didn't say you shouldn't be. Warren Buffett shouldn't be in favor of a estate tax, but I'm not.
No, he is in favor of an estate tax.
I know. I'm saying he can do what he wants. Yes. There are people who will say...
I'm just trying to say to you, some reasonable people believe that there ought to be an
I am
estate
saying
tax.
to you that we need to encourage saving and investing in this country.
Okay.
We need to do everything we can. That's one thing we need to do.
Okay. Encourage saving.
We need to do something about the litigation explosion. You know, it's extremely...
The president's working on that in the Congress.
Right. Well, that's you think that's going to solve the problem? Well, no. My goodness, we got to do something about health care. We spend 15% of our GDP on health care. We get little to show for it. The rest of the world doesn't spend that. We are not competitive anymore. We've got to figure out why we're not competitive.
Well, you tell me why we're not competitive.
I just got through telling you. Litigation explosion. The rest of the world doesn't have it. We're spending huge amounts on health care, not getting results.
Well,
education.
The reason we're not competitive is the primary reason we're not competitive is not because of litigation expenses. That is not the primary reason we're not competitive.
I didn't say it was. I said I'm listing to you 5 or 6 or 8 different reasons. They all add up.
Okay.
You know, you put $1 trillion here and $1 trillion there. It's pretty soon. It's a lot of money. You look at education. We don't have the best education system in the world for whatever reason. We have problems with unions. We have problems with lots of regulations which other countries don't have. Now, maybe we've made the right decision to have them, but the results are we're not competitive.
Well, with respect to the fiscal deficit, $400 billion.
It's outrageous. Nightmare.
So do you think that the administration should, first of all, not make permanent the tax cuts of the first term?
They should cut spending. Listen, I'd rather spend my own money
rather than tax cuts. So you'd leave the tax cuts there. You, Jim Rogers, would leave the tax cuts there.
Absolutely.
And you could. Where are you going to cut the spending? Most of it is not touchable because of its entitlements.
What do you mean it's not touchable?
Entitlements is 2/3 of the budget spending.
Well, who said you can't touch entitlements?
Oh, you want to do
they
that?
They didn't have entitlements 50 years ago, Charlie. They didn't have entitlements 40 years ago.
You're against entitlements, Jim?
Well, yes, of course I'm against most entitlements.
You're against Social Security? You're against
Hold on now. Let's not get carried away here. I'm certainly against
Which entitlements are you against?
I'm against cutting out the fat. I'm against cutting the...
You know what you sound like?
Hold on. I don't want to hear it. I know what you're going to say. I don't want to hear it. I'm telling you, we've got to cut the spending. We've got to cut the spending.
Where would you cut the spending?
You just said entitlements. I would cut defense. I would cut entitlements.
More from defense or more from entitlements?
Both. Probably, proportionally. I would cut both.
What do you think of the president's budget?
It's outrageous. It's got gigantic deficits, none of which are going to... And he says he's cutting spending and they're going to make it better.
He says he'll cut the deficit by the end of his administration.
You believe it?
No,
Charles,
I don't.
Carl, well, I don't either.
Yeah.
Okay, that's 2 people here who are reasonably intelligent people, at least you are. We know he's not going to cut spending the way he says he is, and Congress isn't either.
Because he wants to make the tax cuts permanent, the argument goes, as well as...
The tax cuts should be permanent. Had you rather spend your money or let some congressman?
I would rather spend my money.
Okay, me too. And everybody watching this show.
That's not necessarily the answer to the problem.
I promise you're smarter than nearly every one of the congressmen.
Well, let me stay with this idea. So we are not very realistic about our present economic crisis.
No, we are not. There is a crisis coming. Most people, and in Washington, they don't understand it. The government is trying to make the deficit, the dollar go down. They want the dollar to decline. They think it's good. That is the official policy.
Because they think it'll promote American exports.
Right.
That's it.
And it will cut imports. But I told you it has never worked, long-term or medium-term, any country which has tried it throughout history.
Are you shorting the dollar?
I'm buying other currency. I told you, my baby girl does not have a U.S. bank account.
Right.
My baby girl has all of her assets outside of the U.S.
Your baby girl's got a lot of money, my friend. All right. Let me just talk about two other issues here before we talk about commodities in this book quickly. The rise of China, which you have spoken about in other books and other times on this program.
Right.
And India. What's the impact of all that? And what is it about their economy? Is it simply they got 2 billion people and they got their own market there to buy their products and they're a consuming nation? And is it also because what?
Well, first of all, I differentiate between India and China.
Right.
India's okay, but China is it. China's the next great country in the world. You remember my baby girl? My baby girl is learning Mandarin. She is learning Chinese because she knows it's the next language of her lifetime.
Yeah.
She's 20 months old, and it makes me so proud.
Are you serious? She's learning Mandarin?
Yes, we have a Chinese nanny who lives with us and who only speaks Mandarin to this baby girl. And the baby girl is fabulous at it. She's better than I am at anything, as a matter of fact.
She grows up fast.
Anyway, she's going to take care of you. But look, they've
and your
unleashed...
wife is a North Carolinian, for God's sake.
That's right. She's from North Carolina. And she doesn't speak Chinese either.
Give me a sense of how fast you think the Chinese economy is growing and when it will overtake the American economy.
Well, the World Bank...
Be the strongest economy in the world.
The World Bank says that by 2020...
2020?
It's going to be the largest economy in the world. Now, the World Bank
in terms
is...
of what measurement?
GDP, not per capita. Now, listen, Charlie, the World Bank...
Not per capita because they got so many more people.
But listen, the World Bank has never been right about anything, so don't rely on that. I'm just giving you somebody as a benchmark. Right. It is growing very rapidly. If you go to Shanghai now, you would be you would be mind-boggled. Your boggle would be mind.
Yeah,
mind would be boggled.
Because
they've unleashed capitalism again. All the overseas Chinese are pouring back in there with huge amounts of money and expertise to develop the economy with 1,300,000,000 people who save and invest. Charlie, in China, when you have an employee, he doesn't say, how many days off do I get? How many vacation days? He says, how many days can I come to work? They're trying to get ahead. You cannot believe the dynamic that's going on in China. They've been growing. They're the fastest growing economy in the world. There are going to be setbacks. I expect a setback this year. In fact, I expect...
Because their economy will overheat or what?
It has overheated, and they're now trying to cut it back. I say there's going to be a hard landing in the real estate market and the financial market in China this year.
So there'll be bargains in Shanghai coming up.
Yeah, I hope to buy it.
You do?
Yeah. My baby girl's going to be my interpreter. She's going to be the interpreter. Take money out of
going to have an apartment for Dad in Shanghai.
Right, exactly. Well done.
Is it a zero-sum game for America, or is it simply the rise of China? In other words, as China goes up, do America have to decline?
No, we don't have to decline. We could work together. We could make fortunes together. We could bring them expertise.
So if you are a wise leader in the West...
I would be over in China right now learning everything I could and doing everything I can to trade with them.
Not so much about that. I mean, clearly you want to do that. But in terms of what kind of relationships and deals should be taking place between the American government and European government and China.
Well, the Europeans are over there right now, for instance, selling them arms and defense products.
I know that.
And we're saying we won't do it. The Europeans are selling, we'll sell you technology. We're saying we won't do it. I mean, Charlie, let's be serious. This is the next great country in the world. We should sell them everything we can. I'm not particularly keen on war. I'm more anti-war than most people.
The reason the president objects to that is he's trying to look after Taiwan.
Charlie, you're bad for my nervous system. I mean,
I'm telling you what they say.
I know what they say, but that's 60 years ago.
Well, it's still the reason that they're not in favor of eliminating the arms embargo.
I understand, but you asked what should be done. Right. I'm saying to you, what kind of madness is that? That was Chiang Kai-shek is long since dead.
Your position would be, forget the past, forget promises, whatever was made, let the Chinese have Taiwan.
I didn't say let. I said let them sort it out.
All right, let me just finally, a couple of questions here. Hot Commodities, How Anyone Can Invest Profitably in the World's Best. Do you make a lot of money on these books?
No, Charlie, you know as well as I do that you don't make a lot of money with books. Guys like you do, to support your champagne habit.
So what's your argument for commodities?
Well, it's the next asset class. Stocks and bonds, you should not be investing in stocks and bonds for the next 10 or 15 years. Yeah. This is the place to invest.
Commodities. You know what, when I hear you say that, you know what most people know about commodities?
Zero.
Zero.
You know that 25 years ago, people couldn't spell mutual funds, didn't know what they were. They learned. Finally.
Yes.
That's what's going to happen here. People can't spell commodities. They don't know how to do it. They think it's dangerous. Everybody's got a brother-in-law, Charlie, who lost his shirt in pork bellies.
Right.
And everybody thinks they're horrible and dangerous. They don't have to be dangerous. You can make a fortune and forget your brother-in-law.
Give me a small example of how somebody can make a fortune in commodities.
You can buy, say, sugar. Say you know what sugar is.
Yes, I do.
You didn't have a clue what Enron was. You didn't have a clue what WorldCom was.
And they were trading.
They were trading. You didn't know about .com.
Well,
everybody
knew about .com.
Yeah, everybody knew about it. They thought they did,
Yeah.
but they didn't know what they were, and they lost their shirts.
Well, they lost their shirts
because they didn't know what they were doing.
Right.
You know what sugar is. You know what coffee is. You know
why don't I
what.
just buy gold?
You can buy gold. My baby girl owns some gold, but I will tell you that my baby girl doesn't think she's going to make as much money in gold as she will in sugar and coffee, and she knows more about sugar and coffee than she does
she speaks
gold.
Mandarin too.
And she's got a foreign bank account. She's going to take care of me someday. I should bring my baby girl to this show. That's what I should do.
What the hell am I doing interviewing you? I should be talking to your baby girl.
Exactly.
How old is
right.
she now?
She's 21 months.
She's 21 months.
21 months.
Hot
Yeah.
Commodities, Jim Rogers' book. He appears on all the famous shows, and I'm pleased to have him stop by this show. Thank you.
Thank you, Charlie. It's been fun.
Good to have you.